Hey, good morning, guys. Welcome to Market Mondays. Hopefully, you guys had a great weekend. I'm going to give you guys a big update on what happened all last week. Not really big, and there's not a whole lot of information that came out, but there is some notes about how the tariff is going to impact the economy. So, before I get right into it, I'm going to give you guys a dad joke, which is one I found this morning. It's pretty good. So, I just had about 3 cans of alphabet soup the other day. This morning, I had the biggest vowel movement of my life. All right, so getting right into it. Last week we got a lot of information about the inflation reports. Now, the biggest things about the inflation reports is that we were wondering how the tariff was going to impact these inflation reports. So, for the most part, inflation moved up as expected, but it didn't move up as big as everyone hoped it or thought it would because of the tariffs. So, to give you guys an update, the big one, the consumer price index. It only moved up about 0.2%, and if you dive deeper into the report, there was very minimal impacts on the tariffs. Now, if you look at the inflation report that came out the following day, called Producer Price Index, this measures more wholesale inflation, which is the wholesale basic materials cost, things like that. That did tick up a bit higher, almost like 0.9, 0.7%, and it was impacted by the wholesale. But if you look at the bigger picture, the tariffs really impacts the materials being imported from the other countries. So, and what's crazy about this cost is that it's not very high per unit if you really think about it. A lot of these things that we buy are at very low cost. So the impacts on those tariffs on the low cost based on a percentage, the dollar amount is not very high. For example, I found out like it may cost like less than $100 to make a cell phone, a smartphone. So if you think about the cost to make a smartphone, maybe it's like $10 or something like that. The cost on a 15% tariff on a $10 cost of item isn't very high. It might be like $1 or $2. So that's kind of an example of the tariffs impacting the wholesale numbers, not so much of the cost of the product itself. It's not saying that the tariff is going to impact the price, because a lot of times a lot of these retailers they're going to sell these items for way more than what it costs to make. So producer price index did go up quite a bit because of the tariffs, but again, that has to do with wholesale inventory and materials and things like that. Now, overall, rates did basically moved sideways after the really big improvement from the unemployment rate that we got about 2 weeks ago. It did drop down quite a bit because of it. So our next hope is that the PCE, the third inflation report for the month, there's a good strong chance that it doesn't improve that much either. But if it improves, if it's better than expected, as in it doesn't go up as much as expected, then we could still see improvement in rates. But for the most part, we're probably going to see rates move sideways. We hope it stays in this lower range. But for the most part, the next big report afterwards is going to be the next unemployment rate information, which is in about 2 weeks. There's going to be a big Fed meeting this week. They are going to consider potentially raising the Fed funds rate by maybe 1/4 or 0.5%. Or sorry, lower it. So they may consider doing that in this next meeting based on how the unemployment rate improved. But the other thing that may tip them from not going in that direction is because the inflation reports that we got last week didn't really moved up instead. So there's a bit of a balance that they have to strike. Maybe they do it in September, but that's going to be an interesting. They're going to figure this out in this week's meeting, the Jackson Hole meeting. Otherwise, that's really all I got for you guys this week. Hope you guys have a great week. Nuke out.